MDA Space is my highest conviction way to play the new space economy, the most undervalued company in the space sector. Wow, right? That is a massively bold claim dropped by a retail investor on Reddit recently, and I'll be honest, it instantly caught my attention. But, we have to ask, does the actual on the ground, or I guess in the space reality of this company, match that kind of hype? Well, let's unpack it.
Welcome to This Explainer. Today, we are taking a seriously deep dive into the source material surrounding MDA Space. Our main goal here is to decode the recent strategic moves of this legacy company. We want to figure out if it's genuinely positioning itself to be a dominant force in what the World Economic Forum projects will be a staggering $1.8 trillion space economy by 2035.
So here is our roadmap for today's analysis. We're going to cover 1. The undervalued space giant. 2. Commercializing space robotics. 3. Eyes on the Earth. 4. Expanding the U.S. footprint. And finally, 5. The financial reality check. All right, let's jump right in.
Starting off with Section 1, the undervalued space giant. To really get a grasp on this, we first need to establish exactly what MDA Space does and how they've structured themselves to tackle this booming new space economy.
MDA essentially operates across 3 very distinct business units. Think of satellite systems as the infrastructure providers. They're actually the largest third-party software-defined satellite manufacturer out there, acting kind of like a neutral Switzerland for commercial buyers. Then you have robotics and space operations. These guys are basically the construction workers of space. And finally, geointelligence, which serves as the vital eyes, providing incredibly detailed Earth observation data.
And that brings us seamlessly to Section 2, commercializing space robotics. Let's look at how their deep foundation builds into their first major growth pillar, which heavily involves the legendary Canadarm legacy.
Back in June 2024, MDA Space was awarded a staggering contract from the Canadian Space Agency. We're talking $1 billion. $1 billion. This massive influx of funding is for the final design and construction of the Canadarm3 flight system. It's an incredibly advanced space robotics system that's going to be used aboard Gateway, which is the NASA-led multinational space station in lunar orbit. And this station is literally going to support humanity's return to the moon under the Artemis program.
But what's truly fascinating here is how MDA isn't just stopping at government contracts. They are heavily leveraging that government-funded heritage to pivot right into the highly lucrative commercial sector. In fact, they already locked in their first commercial sale of Canadarm3 tech to Axiom Space, delivering 32 external robotic interfaces for what will be the world's first commercial space station. They've even rolled out a brand new suite of commercial space robotics called MDA Skymaker, which is specifically designed to serve emerging markets like lunar rovers, satellite servicing, and even in-space manufacturing. It's a massive shift.
Moving right along to Section 3, Eyes on the Earth. Here, we're going to focus on their geointelligence division, a sector that's banking on a massive catalyst expected in late 2026.
Enter the MDA Chorus constellation. This represents their absolute next-generation Earth observation capability. It builds on over 55 years of heritage, including the iconic RadarSat program, to deliver a significantly enhanced imaging system that actually integrates data from multiple satellites. And that big catalyst I mentioned? It is officially scheduled to launch in late 2026, hitching a ride aboard a SpaceX Falcon 9 rocket.
Now, to really understand why this is such a game changer, we have to decode some dense industry jargon, namely C-band and X-band SAR. Basically, synthetic aperture radar acts like a pair of high-tech space binoculars. CORUS uses a super powerful C-band sensor for broad area coverage. We're talking a massive 700-kilometer wide swath, and it pairs that with a trailing high-resolution X-band sensor. And because it relies on radar rather than traditional optics, it can image the Earth day or night in total perfect clarity, completely regardless of cloud cover or bad weather.
So what do you actually do with all this advanced data? Well, the real-world applications are profoundly impactful. CHROs can track illegal fishing and ensure maritime national security across vast remote oceans. It allows for rapid disaster response, instantly assessing earthquake and hurricane damage to help guide rescue teams on the ground. It tracks deforestation, monitors climate change impacts, and provides incredibly deep geospatial analytics for things like urban planning. We are talking about high-frequency, near real-time data exploitation, aided by AI, of course, that governments and commercial entities are practically desperate for right now. Which brings us to Section 4, expanding the U.S. footprint. let's examine a major, aggressive strategic move MDA made to capture a much larger slice of the global pie. $620 million. That is the all-cash purchase price for their acquisition of Blue Canyon Technologies, or BCT, a deal that's expected to officially close in the fourth quarter of 2026. BCT is a heavily established spacecraft manufacturer based out of Colorado. They bring an 18-year flight heritage and a workforce of over 400 employees to the table.
Now, if you're wondering exactly why MDA Space would drop $620 million in cash for this, just take a close look at this revenue breakdown. A whopping 75% of BCT's revenue comes directly from defense. MDA is very selectively expanding its geographic presence to aggressively capture a massive chunk of accelerating U.S. and global defense spending. To put the sheer size of that market into perspective, U.S. defense space spending alone is estimated to hit $74 billion in 2025.
So the strategic advantage here is pretty immediate. BCT instantly adds $3.5 billion to MDA's pipeline. Crucially, and this is a big one, it provides a clear pathway to obtain the necessary U.S. security clearances required to pursue highly classified programs and actually compete for prime defense contracts. Plus, it brings top-tier manufacturing facilities in Lafayette and Boulder, Colorado into the fold, and is expected to be immediately accretive to their adjusted EBITDA by 2027. It's a huge transformation from a Canadian champion into a global defense supplier.
All right, let's bring it home with Section 5, the financial reality check. We've seen the cutting-edge tech, we've seen the strategy, but now we really need to look past the narrative and examine the hard financial numbers from their Q1 2026 earnings report.
And honestly, the growth narrative absolutely holds up when you look at the top-line revenue. Q1 2026 saw revenues hit 464.1 million Canadian dollars. That is a massive 32.2% year-over-year jump compared to Q1 2025. On top of that, they also completed a highly successful initial public offering on the New York Stock Exchange during this quarter, bringing in roughly $300 million to further boost their liquidity. But where is that money actually coming from? Well, breaking down that revenue shows us exactly where the engine of this company is right now. Satellite Systems brought in $313.1 million for the quarter, making it overwhelmingly their largest segment. This tracks perfectly with what that Reddit analysis flagged in the very beginning, pointing out that MDA's facility in Montreal now has the capacity to produce 2 satellites per day on their Aurora bus. And let me tell you, that production capacity is absolutely vital because of the sheer scale of the opportunity in front of them. The CEO, Mike Greenlee, has stated they aim to build between 8,000 and 15,000 satellites over the next decade. Just think about that kind of volume for a second. At roughly $10 million per satellite, you are looking at a staggering $80 to $150 billion revenue opportunity. That's for a company that expects to do about $1.8 billion in total revenue for all of 2026.
But to maintain our objective view throughout this explainer, we absolutely must responsibly weigh this bull case against the very real risks. Yes, they have a massive $40 billion pipeline and a totally solid $3.7 billion backlog, plus a rapidly growing U.S. defense footprint. However, the analysis also flags high customer concentration in that booming satellite segment, tightening margins as their manufacturing scales up, and management's own guidance warning that free cash flow will be neutral to negative in 2026 due to working capital fluctuations.
Which brings us to our final thought. We've seen their impressive pivot to commercial robotics, their highly advanced Earth observation technology, and an aggressive cash-backed push straight into the lucrative U.S. defense market. They are undeniably a profitable player in an industry that is notoriously known for burning through cash. So as the new space economy races toward $1.8 trillion by 2035, you have to ask yourself, based on all the evidence we've just gone through, is this legacy company's biggest leap still ahead?